Banking. Sampath Reddy is here with us. Sampath, let me start talking to you about markets from the sector you look at very closely and even belong to the financial space. The last 2 days trading session, the nervousness on the street came on the back of NBFCs and select private sector banks which appear or seemingly are in trouble, which actually collapsed, and people thought that there could be a run on the bank as well. Later on, Yes Bank came on the channel today, and even we broke the exclusive story on RBI, which will get you on the channel later. But do you think things are stabilizing in the lending space, or there are select pockets of very big worries as well?
No, I think in general, we've been liking the private sector banks, private sector banks which are very well run, or some of the NBFCs which are very well run. We've been focusing on them. I think most of the players, there's a very good amount of opportunity in the financial sector where you can choose very good quality lenders. And that's where we have been deploying our money. I think the top 5-6 banks and few good quality NBFCs. I think that's where the bulk of our money is deployed, which I think where we don't really see any kind of a stress there. And also there's a good amount of growth opportunity for the NBFCs as well as the banks as such in terms of growth prospects. And these are the ones which are pretty much, I would say, with a very low NPA related risks, and as well as have got a very good return on equity and return on assets. So we've been liking some of these companies, and I would say, if you ask me, from the stressed exposure point of view, we don't have any of those kind of investments right now in our equity portfolio.
Right. Talk to us about the areas which you have been adding into in the last, say, 8 to 10 months of the weakness in the market. Which are the areas which you have really, and how the flows to your, ULIP schemes, and on the back of that, where you have been adding on to positions?
Right. So we've been liking especially the capital equipment makers. When we have, with the recent stimulus by the finance minister, with the reduction of the tax rate, the reduction of the tax rates, and also especially the 15% tax rate for the new investment which are going to come from here on. I think these two will be clearly the drivers for the pickup in the corporate. Pickup in the private sector capex. That's one of the sectors we've been liking. Most of the capital equipment makers, whether it is compressors or electrodes or the grinding wheels, etc. These kind of players, all of these, there are very large list of small capital equipment makers. I think that's a segment which we've been liking, especially the industrials and capital equipment makers. That's one thing. And also we've been liking the consumer sector for quite some time. I think that's what we have where the visibility in terms of earnings growth is very, very robust. These are the two sectors we've been liking. In terms of, especially from, I would say, the recovery point of view, the capital equipment makers is something which we've been very keenly hoping for. Apart from that, IT as a sector, we've been liking that because of very good attractive valuations and very good cash flows in the companies with a very great return ratios and capital efficiency, etc. That sector also we've been liking. Pharma is a sector where we've been trying to we've been watching that sector closely. We've been trying to make some small investments here and there. But the pressures in the pricing in the US market continues to be there, and that sector is yet to bottom out. But we are the way the valuations are, I think that sector is also pretty much close to the bottom. These are the 4 sectors we've been liking. Apart from that, some of the utilities, especially the electricity side, we've been liking them as well.
You were saying that you are finding areas of strength and quality in the entire financial space. We also are talking to a lot of managements on a daily basis, and some of them are not sounding as negative from the financials and NBFC space. M&M Finance just today was on our channel, and they are actually witnessing improved inquiries due to the festive season, and they are actually raising their guidance for the next year, for the full year. Sampath, as we were discussing earlier on the show, that day before yesterday, last hour panic in the financial space and private banking space had a big role coming in from Yes Bank's sharp fall as well. And we did see the entire sequence of events, commentary, and even disclosures, for all the parties concerned which came in. But there's another important story which we broke earlier in the morning is how does RBI observe the events at Yes Bank? And my colleague Nayantara has got exclusive details that they also have an eye very firmly on Yes Bank and what their observations are, which is responsible for the reason why Yes Bank is partly very sharply gaining in trade today. Nayantara, tell us what exclusive conversations you've had with the regulator regarding things that are at Yes Bank.
I've spoken to senior members in the Reserve Bank of India, and the big message from the regulator, the banking regulator, is depositors worry not, investors worry not, the bank is indeed stable. This is source-based information with my sources saying that as far as capital adequacy goes, Yes Bank meeting it on all kind of parameters, that there are false rumors and rumor mongering, which is one of the big reasons behind the share price crashing the way it has. There is no question of Yes Bank being merged with any public sector bank. There had been a very big rumor to that effect on social media as well. So the regulator, my sources, quashing all of that and attributing the share price crash also to the founder Rana Kapoor's pledged shares being sold in the market. Now, post that action, it seems as if Yes Bank and the regulator have been in touch with the regulator being informed that Rana Kapoor, the founder's stake, has now fallen to below 1%. It's around 0.75 to 0.8% post the action on his pledged shares. And the fact that the bank remains committed to its capital raise exercise. The question, of course, will be when. You have seen this stock price crash all the way to 30, breach 30. So, you know, the question will be at what level you're likely to see the bank go in for the capital raise, but it has certainly informed the RBI that it is committed to the capital raising exercise. What's more, my sources in the Reserve Bank saying that you know, they're happy with the current management for bringing out a truer picture of the asset quality. Now, that had been one big area of concern. One of the big reasons also why you had seen the board being overhauled, Rana Kapoor being asked to step down, etc., was because the Reserve Bank was convinced the true asset quality picture was not known. And now it feels that is certainly the case, and the new management is committed to turning around the asset quality.
Sampath, if one were to take a 1 year call between this Diwali and next Diwali, the way fundamentals are shaping up, do you see markets substantially higher or little higher, or at least broad markets will move up? Do you think a bottom is in place now and markets will make positive returns over the next 1 year?
In fact, you know, the way the markets are priced today, and given that some of the measures which have been announced by the government, especially the recent tax cuts, that itself will push the overall aggregate market earnings by almost about 10 to 14%. That coupled with recovery in the private sector capex and overall recovery in the earnings growth in the corporate India, I think by the time next 1 year we could be substantially high from the current levels in terms of the market wise.
All right, Sampath, we'll let you go on that one. Thank you so much for joining us with your take on the markets and the various developments happening in the markets right now on individual sectors.